Hello and welcome to Millennial Money Mindset. If you want the fruits, you need the roots. Thanks so much for joining us. This is season 4 of the podcast, so thanks so much again. And we are joined by Simon Popple, who is an expert in gold and commodities. So excited for him to join us today. Thanks so much, Simon, for joining us.
Great to be here.
So we're going to talk about commodities. So think about commodities might sound like a big scary word, but just imagine having breakfast this morning. You might have had Weetabix on your morning breakfast. You might have had cornflakes, or you might have had toast. You might have sat down to eat that breakfast on a wooden table. So the breakfast you're eating, that Weetabix, that cornflakes, or that toast, that is a commodity. That's a raw material. That is Earth's natural resources. So you sit down at the table and that is made out of wood. You might have eaten a cereal with your metal spoon, and that is a commodity. You might travel to work in the morning and in your car, that car is made out of metal and steel, and that is a commodity. And you might be putting petrol in it to drive that car to work. These are all commodities, and these are all really, really important, and they often get missed in the conversation around investing. So we've got Simon today, who's going to talk about the importance of commodities and talking about investing. This is more of an advanced subject, so not necessarily for everyone, but it's super important to understand this on your investing journey. So Simon, thanks so much for joining us. So let's talk about commodities and gold as well, because that's your expertise. So why invest into commodities? Maybe talk about the benefits of having commodities as part of a diverse and overall portfolio.
Well, I think the first thing to remember is you can't print them. And, with all the money printing going on in the world, as you rightly say, you've got commodities for breakfast, you use a commodity to get to work, there's a lot of commodities at work, and you can't print them. If you don't have them, if you don't have that metal spoon, you don't have a metal spoon. You can't just go to your computer and just sort of create one. So for me, investing in tangible assets that you can't print, especially in today's world where everything seems to be printed, is incredibly important. And I think that people forget how important commodities are to our daily lives. And very few people have any in their portfolio. And gold is tried and tested. It's been around for thousands of years. You can take a gold bar anywhere in the world and it's recognized as being valuable. And you can't do that with everything. And so commodities for me are an absolutely essential part of anyone's portfolio.
Yeah, that's great to hear. One of the things that is really important for me, commodities have a different personality type than other investments that you can make. So commodities move in a different way depending on the economical cycle. So depending if it's a recession or if we're going through kind of boom times, or the world moves in different kind of cycles and different economical cycles and different asset classes, which that might be property, the roof over your head, that might be the pound coin in your back pocket, that might be businesses that you can buy on the stock exchange. These all move differently depending on the different stages of the economical cycle. And with commodities, they actually move even differently. So they have a different way of moving, and they do better in different times. So this is why we talk about in this podcast having a diverse portfolio, and this is having different asset classes. And this is why commodities are so important. So that's great information. So maybe let's talk about actually what is a commodity. So maybe someone listening at home is thinking, we'll talk about eating for breakfast, but actually let's maybe go more into it and kind of tell me more about the different types of commodities that you can actually put in your portfolio. What are the strengths and weaknesses of different commodities? You mentioned gold. There's other commodities that we talk about food, so eating your breakfast in the morning, fuel, getting to work, or if you go on holiday, that's the airplane that flies you there, that you're using jet fuel for that, or even precious metals like gold, for instance, and then also industrial needs as well. So let's maybe touch on each of those and maybe tell me what are your thoughts on each of those, which ones do you like, which ones do you not like, and just maybe tell me more about commodities and etc.
Okay, no, sure. I think one of the important things to remember is that, as I said earlier, you can't print them. And you rightly say that all commodities have got a different role in life. Gold is, I think if the world is having a particularly tough time, a lot of people go to gold. One of the big arguments against gold is it doesn't yield anything. But then if you look at putting money in the bank, quite often you've got negative yields, so you actually get less out than you put in, or you get a very low yield. And obviously with inflation eating away at that, a lot of the arguments for not holding gold in your portfolio have actually disappeared. Now, in terms of commodities that you like, I think there's a lot to be said for being well diversified, because no one knows what the future is going to bring. But if you are particularly keen on a certain area, for example, if you believe that electric vehicles are the future, or you believe that nuclear power is the future, or that clean tech is the future, then you can do some research and invest in commodities that are more used in those areas. But I would suggest having a broad range of different commodities. And personally, I tend to focus on Australia and Canada, because I also like the FX diversification, because I actually put a lot of my money into UK real estate, so I'm massively exposed to both UK real estate and sterling. And so by actually diversifying into other countries, not only do I have the commodity diversification, but I also have the currency diversification. So going back to your answer, or your question rather, I think you want to be in a broad range of commodities. No one knows what the future is going to bring, but if you've got a diverse portfolio, then whatever happens, you should have a few winners in that.
That's a great point, and I totally agree with you. I think also it's a peace of mind thing as well. So this podcast is called Millennial Money Mindset, and it's coming back to mindset, how you think and feel, and how your emotions are with your investing. So having a diverse portfolio, you actually reduce your stress and worry. So if you're all in on, say, property, or if you're going all in on the stock, if you're buying one stock and that stock falls 20%, you're going to be stressed and worried about it. You're going to be out with your friends, you're going to be out for dinner with your partner, and you're going to be stressed and worried about, what happens in the markets today, what happens in the market tomorrow. But if you've got a spread of different asset classes all working for in good times and bad times, then it's going to reduce your stress and worry massively. I remember I bought gold. I was very bullish. I was very excited about gold before the financial crash in 2008. So I think I bought to $650 an ounce, and it kind of ramped up massively as people were getting worried and scared. And what the good thing about gold is that people flock towards gold in kind of bad times. When people get stressed and when they think the market's going to crash, they like to have something safe and secure they can hold and touch and look at, and it's pretty. But I do agree with you, it doesn't yield anything. So to have all your money in gold, it's not necessarily going to be the best thing for everyone, but it is a good hedge, or it's a good one to have as a kind of a diverse portfolio. So let's talk about more about the different investments for the future. So it's interesting you mentioned batteries, or you mentioned kind of electric cars, electric vehicles, and you talked about nuclear power as well. So where do you see this having an impact on commodities?
Well,
so you've got uranium, is it and with electric vehicles, they use lithium to kind of use these batteries. So tell me more about what your thoughts on that.
Yeah, no, I mean, I think that I particularly like mining companies, to be honest, because they're exploring. Technology has improved significantly over the last few years. We've got drones, things like that, and even though the methods of extraction are largely the same, the methods of finding commodities have certainly improved.
Yeah.
But just touching on your diversification point, I mean, I put people into a company called Chalice last year.
Okay.
Now, I really like Chalice for a number of reasons, but one of which was they had land around Fosterville, which is the world's highest margin gold mine.
Yeah.
But they actually made a discovery in Julimar, and the shares went from I told people around 12.5, 15 cents. The shares went to over $9. So over 50x return. But I think one of the important things in commodities is having good ideas is part of it, but there's a huge amount of psychology in it as well, because when these stocks take off, or go down, they can move dramatically. And you could have, if for example someone comes out with another way of powering electric vehicles that doesn't involve lithium, and all your money is in lithium, look out below, because those shares to say they could tank is an understatement. But if you're in lots of different commodities, then chances are you're well covered. But I think also from an investment perspective, you don't want to be too greedy. My portfolio trebled last year, which I was very happy about. But if I had all my money in Chalice, it would have gone up over 50 times. But you need to have a psychology of being sensible, because although things can go really well, they can go really badly as well. But if you're well diversified across different areas, so electric vehicles, nuclear power, clean tech, gold and silver, and different countries as well, then although some things won't work out, you've got a greater chance that something will. And providing that does happen, your entire portfolio can go up significantly. And some of these stocks can go up 10, 15, 20, 50 times, some even more than that. But you need to sort of have a diverse portfolio to improve your chances of hitting commodities that end up doing really well.
That's a great insight into what you do at Brookville Capital. So maybe you said you started Brookville Capital in 2008, and before that you were head of investment management at Stratton Parkers, and then you went on to become a director of Topland, one of the Europe's largest private investing companies. So you started a newsletter with Money Week called Metals and Miners. I'm a huge fan of Money Week. I'm a subscriber to Money Week. So massive honour for me to be speaking with you today, because I'm a big fan of the work you guys do. And so tell me why you set up Brookville up originally, and talk about the moment where you decided to set this up. Where were you, and was there contributing factors? And maybe just tell us more about what you do at Brookville Capital and how you help people.
No, sure. Well, I before I worked at Stratus, I used to work in the city doing M&A, mergers and acquisitions, corporate finance, and then I was in property, and I like property a lot. There was some very good money to be made there, but I was sort of conscious that what goes up has to come down, and I must say I got out of property in 2008, so I was a little bit early, to put it mildly. But I was really looking for the next, for want of a better term, big thing. And that drew me towards commodities, and I did a lot of research and sort of met a lot of people involved in the sector, and liked it a lot, and thought it was very undervalued. And so I started making some investments. They worked out very well. So Money Week asked me to do Metals and Miners for them, and then when they were sold, Agora used to own Money Week, so when they were sold, they asked me to do gold speculator with Jim Rickards.
So we can't talk about commodities without talking about demand and supply. So this is the fundamentals. So I used to trade gas. I used to buy and sell natural gas. So if you think about if you had a shower this morning, that might have been heated by natural gas. Or if you turn the cooker on at cooking your evening meal, that's natural gas. Most of it comes from North Sea. And it's so supply and demand driven. So I used to have 8 screens around me, kind of working 12-hour days. And the main factor you need to understand was demand and supply. I used to have our head of trading used to come in and say, Neil, supply and demand, supply and demand, supply and demand. That's all you had to work. All these kind of screens around me, the one single factor was the supply and the demand. And were we long? So was there more gas in the system? And then if it was long, then the price would go down. Was the system short of gas? So was there not enough gas to supply the demand? And then the price would generally go up. Obviously, things would happen, gas, high demand, it was wet, and it was very weather dependent as well. So if it's cold, the price was much more likely to go up because more people were likely to turn on their heating at home. So maybe let's just talk about the supply and demand, and let's drill down into the factors you look at with the mines you look at or the companies you look at, and what we're going to give talk about maybe demand supply and kind of talk more about that.
No, sure. Well, demand tends to be very much led by price, and rather bizarrely, when the price of gold or silver or commodity goes up, you tend to have quite a lot of people jumping on the bandwagon. So they actually probably jump on the bandwagon at probably the worst possible time, because they jump on it when the price is higher rather than lower. And I think there's also a lot of common sense and research required into looking at the market. And I'll give you quite a good example. Zero carbon. In the UK, I know they're looking to get zero carbon heating systems, which I completely applaud. I mean, that is great. But to change from gas to hydrogen would mean digging up every road, putting in a hydrogen pipe. I'm not even sure that transporting hydrogen is safe. And then replacing the gas boiler in everyone's house with a hydrogen boiler. Now, that isn't going to happen overnight. I'm not saying it's not going to happen. I'm just saying it's not going to happen overnight. So I think that when sort of things come out and when things are announced, you need to have a good common sense look at things and think, okay, well, I actually phoned up one of the world's largest boiler makers off the back of an announcement a couple of weeks ago and said, do you have a hydrogen boiler? And they said, well, no, we don't. And we, got no plans to do one. And so you kind of, you hear what's in the media, you hear what the politicians are saying, but just some basic research would indicate that, could it happen? Of course it could happen. But is it likely to happen soon? I think it's unlikely. And therefore, if you are looking at the market and that announcement has trashed natural gas companies, I'd be inclined to buy in at that level, because I think that anything that's going to happen to them is unlikely to happen in the next 5 or 10 years. It could happen thereafter. But I think you need to really just have common sense about what's going on in the market. Likewise, uranium. I mean, if you look at Chernobyl or Fukushima, you could probably think, I never want to, invest in uranium ever. But
Germany turned off their nuclear powers after the earthquake in Fukushima, which caused the nuclear power stations in Japan to basically break down and almost cause a huge tragedy. So after the back of that, Germany did a massive statement and saying, we're not going to use nuclear power ever again, essentially. And for the long term, that's maybe a good idea, but then they moved more into coal and also natural gas, which is obviously a bad thing for the environment. So the environment's a huge, important issue at the moment and for the future. We've got a podcast, we're talking all about the environment with pensions for purpose. So check that out if you want to know more about the environment. But it's a super important topic. But before, we're going to talk about inflation as well in the next podcast with Simon. So stick around for that. But before we go, Simon, just how would someone find you if they wanted to contact you, and any books you'd recommend, or any quotes or anything funny you've had, or anyone you follow on social media?
No, sure. Well, first of all, to find me, just go to www.brookvillecapital.com. That's my website, and you can find out more about me. You can contact me. We can have a call if it's an area that's of interest to you. In terms of books, there's a book called The Psychology of Money, which I recently read, which is very interesting. I haven't got it with me because I lent it to my father, who's lent it to my nephew, his grandson. But it's a great book because what I do, as well as giving people ideas as to where they can invest, the psychology of it is incredibly important. So that's very important.
Well, I haven't read it. I've heard everywhere I go, it seems to follow me around me. The publisher is Harman & House, and I actually pitched for them with my book, Millennial Money Mindset, and they went with The Psychology of Money, and it's gone on really well. So I haven't read it yet, but I've kind of put it off.
It's a good read. It's a good read.
I love reading. I love books, but I've heard a lot about that one, so I will have to check that one out. But also, if you like mindset, if you like psychology, my book, Millennial Money Mindset, is also available. And talking about the environment, we plant a tree for each book bought. So check that one out. But Simon, thanks so much for joining us. We're going to speak again very shortly about inflation, which is super important at the moment. So if you're worried about spending power in your back pocket, if you're worried about your money work as hard as you, then this is a podcast to check out. We're going to take Simon's expertise and show you actually how to make your money work harder using commodities, using gold, and having a diverse portfolio. So Simon, thanks so much for joining us.
Great to be here. Thank you very much.
Thank you. Thanks so much.
Money mindset. I think that sounds all right.